After 2 years of slowly cooling, US inflation just jumped back up. The March report came in at 3.3%, up from just 2.4% the month before. The Iran war is partly to blame. Here's what's actually happening, what it means for your money, and what to watch for in the May 12th release that could decide everything. Here are the numbers that have economists worried. In February 2026, US consumer prices rose 2.4% compared to a year earlier, basically right on track for the Fed's 2% target. In March, that number spiked to 3.3%, almost a full percentage point increase in a single month. It is one of the biggest one-month jumps in years. Here's where the inflation is actually coming from. Gasoline prices jumped more than 21% year over year. That's the biggest single contributor. Total energy costs are up almost 11%. Food prices are up just under 3% and mostly stable. But here's the part most news coverage missed completely. Core inflation, which excludes food and energy because they're volatile, actually got better. It dropped from 2.8% to 2.6%. That means the real underlying inflation in the US economy is still cooling. The headline number is being driven almost entirely by oil and gasoline, which is a direct result of the Iran war. This is the most important distinction in the whole report. Headline inflation includes everything, including the volatile stuff like gasoline. That's the 3.3% number. Underlying or core inflation excludes food and energy. That's the 2.6% number, and it's actually below the Fed's threshold of concern. Translation: the inflation jump is not because the US economy is overheating. It's because of one specific external event. If the Iran war ends, oil prices normalize and headline inflation drops back fast. If the war drags on or escalates, it stays elevated. Here's the broader picture. This is US inflation since 2020. Right before COVID, it was around 2.5%, basically right at the Fed target. It briefly dipped during lockdowns. Then in 2022, it spiked to 9.1%, the highest level in over 40 years. The Fed responded by raising interest rates aggressively, and inflation fell steadily for 2 years to around 2.5%. Until last month, when it jumped back up to 3.3%. The current number is nowhere near the 2022 crisis, but it is moving in the wrong direction. 4 real impacts on your money. 1. Mortgage rates. The 30-year fixed jumped from 5.99% at the end of February to 6.38% today. That's about $300 extra per month on a typical mortgage. 2. Credit card APRs are still around 20%. The Fed cut rates 3 times last year, but those cuts haven't continued. Carrying a balance is still expensive. 3. High-yield savings accounts are paying around 4 to 4.5%. That actually beats inflation right now, which is rare. If you have idle cash, it should be there. 4, and this is the silent one, your annual raise. If you got a 2.5% raise this year and inflation comes in at 3.3%, you took a real pay cut of nearly 1%. Most people don't notice this in real time. So what do you actually do about it? 4 moves. 1. If you're buying a home, lock in your rate now. Rates are likely to stay elevated or rise further if the May 12th CPI report comes in hot. 2. Aggressively pay down any credit card balances. There is no investment that beats not paying 20% interest. 3. Move any idle cash from a checking or low-yield savings account into a high-yield savings account paying 4% or more. Don't let inflation eat your emergency fund. 4. Keep investing in stocks. The S&P 500 has historically returned about 10% per year, which more than outpaces inflation over time. Inflation is bad for cash. It's not bad for stocks. All eyes are now on May 12th. The next CPI report comes out at 8:30 in the morning Eastern, and it will tell us whether the March jump was a one-time energy spike or the start of something bigger. Goldman Sachs is predicting that core inflation will keep cooling. The wild card is energy. If Iran's peace talks succeed, oil drops, and the May report could come in calm. If the war escalates, expect another hot reading. Either way, May 12th is the most important data point this month for your mortgage, your credit card, and your overall financial picture. 3.3% inflation. The Iran war is doing most of the damage. Core inflation is actually still cooling. The real question is, what happens next month? We'll keep covering this story as it develops. Until then, pay down debt, lock in mortgage rates if you're buying, and don't let inflation eat your idle cash.